Hey, what's going on, everybody? Hey, welcome back to the Trade More YouTube channel. In this video, we're going to talk about the TTM squeeze. What is the TTM squeeze? I'm going to go into great detail about this indicator and how do you set it up. So if you're a complete beginner and you want to learn how to trade the TTM squeeze, or you've been trading the TTM squeeze and you need a refresher, this video lesson is going to be perfect for you. But before we get started, guys, do me a favor. Smash that subscribe button, all right? Because I literally go live on this channel every single day talking about the markets. Let's get into the video.
The TTM squeeze indicator is more of a volatility indicator, and it's showing us, the squeeze. Let's just take a look at the squeeze really quickly. Okay, the squeeze means that price and volatility are contracting, right? And then it's forming this low volatility environment because, again, it's going sideways. If you go and you look at your stocks, the majority of the time, stocks are actually consolidating. We've got an uptrend, but then they start to consolidate into patterns, ascending triangle patterns, symmetrical triangles, all that good stuff. But one of the hard things is, or one of the things that people do is, whenever they have a price pattern, for example, lots of times people will play the breakouts of the price pattern, the breakout, okay? Now, that's when volatility starts to pick up, right? That's when volatility starts to pick up, okay? And so the cool thing about the squeeze indicator is the squeeze happens when the pressure is building up and the volatility is low. We want to enter when the volatility is low, okay? We want to get in when the volatility is low, so when that price bursts through the pattern, we're already in it, okay? We're already in it. That's what we're trying to do. We're trying to take advantage of a low volatility environment. We're going to build our positions before the explosion, okay? So the TTM squeeze indicator, that's what it is. It is a volatility indicator, combination of price. I'm going to tell you what makes up the TTM squeeze indicator, but I'll tell you this. This squeeze indicator, you're looking at about a 75% chance of success, okay? The person who created this indicator is called John Carter, and John Carter, through all of his testings, when he created this, it's about a 75% success rate. That is huge, okay? That is huge. That's the type of strategy that I want to be in, okay? But again, the biggest thing to remember so far is this is allowing us to build our position in a low volatility environment. Okay, now, what makes up the TTM squeeze? Okay, so first is the Bollinger Bands, right? I don't know how many of y'all have heard of the Bollinger Bands, but the Bollinger Bands. So let me see. I went to...
Really quick, are you guys getting this?
Let me just find my documents. Okay, so let's kind of go over here and let's take a look at it. The Bollinger Band, right? So what is a Bollinger Band? Okay, because remember, the TTM squeeze, it's made up of the Bollinger Bands and then something else I'm going to talk about. Okay, so this is just, I just went to Google and searched Bollinger Band. What is the Bollinger Band? A Bollinger Band is a technical analysis tool defined by a set of lines plotted by standard deviations, okay? And so you can see here that one of the things about the Bollinger Bands is the Bollinger Bands, again, it measures the standard deviation, okay? That's one of the big things about the Bollinger Bands. And the Bollinger Bands, in reality, are a measure of volatility. See here it says, because the standard deviation is a measure of volatility, when the markets become more volatile, the bands widen. Okay? You notice here, when the markets become more volatile, the bands widen. During less volatility periods, the bands contract, okay? So the Bollinger Bands are a tool that helps us plot standard deviation. These bands expand.
All right, do you see what I'm talking about?
Whenever the markets are less volatile, they contract, okay? So let's keep going down here. Technical, there's something I like, how to calculate. It goes into detail if you really want to know how to calculate the Bollinger Bands, but I like it right here. What do the Bollinger Bands tell us? Bollinger Bands are a very popular technique. Many traders believe that the closer the prices move to the upper band, the more overbought the market, okay? Many traders believe that closer the price is to the upper band, the more overbought it is, and vice versa, okay? Now, remember, bands work like this. You'll see them like this, okay? They contract, and then they expand, right? This contraction right in here is whenever the squeeze, right? The squeeze is occurring, okay? See, the squeeze is the central concept of the Bollinger Bands. When the bands come close together, constricting the moving averages, so the Bollinger Bands are made up of moving averages, it's called the squeeze. A squeeze signals a period of low volatility and is considered by traders to be a potential sign. So let's go back and let's talk about that again. A squeeze is a period of low volatility. So the bands are contracting, and then they form this squeeze. So price is working its way down, and then it starts to contract, right? This is that low volatility. We want to build our position in low volatility, right? That's when we want to build it. When it's cheaper, it's quiet, right before that burst. And if you do so, again, this is considered by traders to be a sign of future increased volatility. So it's going to pop one way or the other. Okay, they don't stay in this contraction period forever. The bands expand and price is going to pop, right? The only thing is, we don't know which direction it's going to pop, right? Or release that energy. That's the way you can kind of look at it, is it's building up energy and then boom, explosion. It releases the energy. So what we need to do is we need to say, okay, when price is in a squeeze, it's going to move. We just got to use our other things we're going to talk about to help us get an idea of which direction it's going to burst. Okay? Burst. Now, I want to read one more thing. Approximately 90% of price action occurs between the two bands. The way it works is these bands, as they're going, the majority of the price, it says, occurs inside the bands. Any breakout above or below the bands is a major event. The breakout is not a trading signal, and people make that mistake that when it gets outside of the band, it automatically has to reverse back in. That's not true, okay? But for this purposes, you just need to know what the Bollinger Band is, okay? You can look to see how it's calculated, but it's a volatility tool, okay? And it measured standard deviations, again, of the moves, okay? So, here's another one I found, the basics of Bollinger Bands. And again, you can just Google it. What is a Bollinger Band? It tells you what it's made up of, who created it, right? But here's the thing, standard deviation, right? It measures, standard deviation is a mathematical formula that measures volatility, okay? And so that's what this indicator is, right? And then you can just kind of read it. But right here, here's some pictures of the bands, right? Oops. So, if you look here, when a stock price continually touches the upper band, it's considered overbought, oversold. When the Bollinger Band designated the upper and lower bands are price targets. Okay, so let's just talk about price targets. But again, you can see how they expand. We're going to put it on the chart, right? And then it contracts. Okay, so going back to this indicator, John Carter, who created this indicator, would plot the Bollinger Bands on his chart. So if I go to my chart, let's just pull up any symbol. Let's just pull up Coca-Cola. I've got a clean chart. Now, what I've done was, I'm going to doctor this up right now. I went up here and I made two windows, okay, because I want two charts. And I'm going to show you why I'm going to do that. We're going to build this together, okay? This right here is the daily. This is the weekly. But let's go ahead and add that Bollinger Band on Coca-Cola, okay? Bollinger Band. I just double-clicked it. We're going to leave it right there. This 2 means it measures 2 standard deviations. So let's apply. Let's just look at the Bollinger Bands. Nice and pretty colors. Okay, so if we look at the Bollinger Bands, see what we're talking about? They're contracting, burst of energy. Now, this was earnings, okay? Kind of there, contracting, boom, okay? So again, there's traders that literally trade with the Bollinger Bands. We're not going to trade with the Bollinger Bands, but I just want you to see really quick, okay, that what we just talked about, it's a volatility measure, right? And again, whenever they contract like this, there's going to be an explosion. Contract, explosion, okay? That's the first piece. John Carter, he noticed, he traded the Bollinger Band. Then what he traded was something called the Keltner channels, okay? The Keltner channels. Now, me and Eddie have been talking about this a lot, so I know Eddie knows what these Keltner channels are, but a Keltner channel measures price in reality. It measures what's called the ATR, the average true range in price. So let's go to back to this. Again, I just searched Keltner channels so y'all could see what the Keltner channel index. Now, it's also a volatility measurement, but the key is right here. The upper band, it measures the ATR. This is more of a price type of indicator, okay? But it does have some volatility in it. Let me see. There's a good thing right here. The upper and lower bands, price is reaching the band. So it works very similar to the Bollinger Band. What does the Keltner channel tell you? The Keltner channel was introduced by them. Simple moving out. The Keltner channels have 2 uses. How they're used largely depends on the settings a trader uses. See how it says the EMA, the exponential moving average, the ATR. Bottom line is the Keltner channels measures the ATR, the price, okay? It measures the ATR and the price. And again, you can just kind of go here. Okay, volatility-based envelopes, measures the ATR. Okay, just kind of research it. I never traded with the Keltner channels, but there are a lot of traders that do. Okay, and again, this comes back. Y'all know what this ATR is, the average true range, right? So that's really kind of what the Keltner channel is doing, is the Keltner channel is showing you, or it's measuring the average true range or price. Okay, and again, the Keltner channel. Let's see if we can add the Keltner channel to our study set. Okay, I don't even know if Thinkorswim has it, but there it is, Keltner channels. Okay, Keltner channels. So let's apply that. Okay, now, it's kind of hard to see, so what I want to do is let's just make them a certain color so we're all...
Okay, are you seeing how easy this can be?
I'm just making them one color so they can be distinguished from the Bollinger Bands. Okay. There we go. Keltner channel. Okay. Now, again, it looks like a mess, but I'll tell you what John Carter came up with. Okay. Let's see. Go back. Edit. Keltner channels. Let me customize that. Boom. Okay, there we go. So, remember, the Keltner channels measure the ATR and price. Now, if you just looked at this indicator, this would be freaking hard to tell what it is. But let me tell you what John Carter saw. So we've got our Bollinger Bands, right? Our Bollinger Bands. The black is the Keltner channels. So whenever the Keltner channels are inside the Bollinger Band, okay? So when price and basically volatility are contracted. See, the Keltner channels are measuring the price, right, the ATR. So when the Keltner channels are inside the Bollinger Bands, that's what he saw as this squeeze, right? Okay, because again, the Bollinger Band itself measures the squeeze, but the Keltner channel, again, price. So you can think of that as a price and volatility squeeze. The Bollinger Band measures the volatility squeeze, but then when you add the Keltner channel and the Keltner channels contract, it's a price squeeze, okay? So when you put them together and the Keltner channels are inside the Bollinger Bands...
All right, guys. Hey, I think this will be a great time in the video to ask you, hey, if you are finding value in this video in any way, do me a favor, guys. Smash that like button, all right? It really means a lot to me. It shows YouTube that this video is being helpful to you, and therefore it can push it out and find more people like you so it can be helpful to them. I really appreciate it. Hey, thank you very much. Let's get back into the video.
That's when you have this price and volatility squeeze. Don't worry, we're not going to trade. I just want to tell you again how he created this and, you know, where it came from. So the squeeze indicator, and I'm going to put the squeeze indicator in on the chart. What it's doing is he found a way to plot the Bollinger Bands and the Keltner channels together into one indicator. Okay. Now, when the Keltner channel and the Bollinger Bands, when the Bollinger Bands are inside the Keltner channels, that's what's going to form our red dots on the squeeze indicator. Okay. So when we look at the squeeze indicator, you guys know that it's green dots and it's red dots. So when you see those red dots, that's what you're seeing. You're seeing price and volatility come together, right? That energy building up. Because if you just look at the Bollinger Bands and Keltner channels, when the Bollinger Bands are inside the Keltner channels, or they're inside each other, that's what forms that squeeze. The main thing to remember is price is going to expand one way or the other. One way or the other. So, how do we figure out which way it's going to go? Now, there's other factors, but let me talk a little bit about momentum. Now, there is actually an indicator called momentum. So let's go back over here and let's add momentum. Momentum. Right here, momentum. Right there, not that one, not the crossover. Okay, so momentum. Now, this is just measuring, again, 12 periods, so you take the average of the 12 bars, put them together. It's just measuring the momentum of price, okay?
Yeah, I'm sure you've noticed this too, right?
Price contracts and the Keltner channels are inside the Bollinger Bands, okay? Inside the Bollinger Bands, that's what gives us our squeeze, the red dots. Now, when the squeeze is building up energy, you guys know it goes to green. When the squeeze fires, it turns green. That's that release of energy. Well, where he saw that was, and again, it got too hard to plot like this, is this momentum indicator. Okay, this momentum indicator. Remember, this is the 12-period momentum oscillator. Okay, so what it's measuring is whenever the Bollinger Bands come outside the Keltner channels, right? So, like, for example, you've got they come together, and then the Bollinger Band comes outside the Keltner channel. When that happens, that's what forms this green dot. And you can see that here. Whenever it goes below the zero and it crosses out, that is the indication that price and the Bollinger Bands are breaking out again. Don't worry about this. This is what he figured out. Okay, John Carter. He's the one that put all this together. Okay, but that's what represents the squeeze. Below the zero and the momentum breaks out, and then this Bollinger Band comes outside the Keltner channel. That's the pop. Okay, that is the pop. So all I wanted you to understand right now is he did a lot of work, and he used to trade those indicators, but it became too hard, and so he took all three of these indicators and he put them together to form this brilliant indicator, the TT squeeze indicator, measuring volatility, but it's also got price and it's got momentum, all build into one. Okay? So that's what you need to know. The Bollinger Bands contract inside the Keltner channels, right? It's measuring the volatility of the market. That's the quiet time. And then when that 12-period momentum moving average crosses the zero, that's whenever the Bollinger Bands come outside the Keltner channels, creating the squeeze. Again, don't need to worry about this. We got one indicator, and we're going to go put that indicator on our charts right now. Okay? So I just wanted to kind of give you a brief introduction of where this TTM squeeze came from. But the most important thing to remember is this is allowing us to build our positions during low volatility environment ahead of the squeeze. Okay? Yeah, when the Bollinger Bands contract inside the Keltner channels. I might have said it backwards a minute ago, but yeah. When the Bollinger Bands contract inside the Keltner channels, that's the squeeze. So let's do this. Let me go to my study set, and let's add the TTM squeeze. Okay? Now, this is not proprietary to TD Ameritrade. TD Ameritrade actually bought this. You know, they have the right. They didn't buy it all, but they lease it. So there's other sites that have this indicator. TTM squeeze. Okay? TTM squeeze. Let me just try something. TTM squeeze. Okay, here we go. Now, we added the TTM squeeze, and I left. Let me see here. Let me move this over so we can have some more room. Oops. Sorry, let me just move this over. Okay, so I left the Bollinger Bands, the Keltner channels on there. So let's just look at this. Here is this beautiful TTM squeeze indicator. You do not need to change the defaults, okay? But the colors are just fantastic. Colors are fantastic. So if we look at this indicator, we've talked about this before, but let's just digest it, what this means. Okay, so whenever you see this light blue, that is positive momentum, okay? Positive momentum. When you see the dark blue, it's still positive momentum, but it's decreasing positive momentum. Okay, so price is up, still positive because it's above the zero. When it's above the zero, it's going to be these nice blue colors, really colorful, beautiful eye look. This is such an eye-appealing indicator. It's so great. Okay, boom, positive, 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 still positive, but weakening. Okay, now let's look at the red. The red is bearish momentum. Okay, it's underneath the zero. When it turns to yellow, it's still bearish momentum, but it's decreasing bearish momentum. So the bearish momentum is weakening. Okay? That's the colors. Now, is that baby blue, dark blue, red, yellow? Very eye-appealing. Now, let's take a look at these red dots. These red dots are representing the squeeze. Look at that. Look at that. When the Bollinger Bands are inside the Keltner channels, that's where this squeeze is coming from. Understand, this is when price and volatility are contracting, getting ready to explode. Okay, squeezing. We're getting in, getting ready for explode before the explosion. Okay, that's the red dots. Now, look at this green dot. The green dot is right there. Remember what I said, that when the momentum indicator crosses above zero and this Bollinger Band exits the Keltner channel, that's what creates the green dot. Remember the Bollinger Band concept. They contract, they expand. Price hugs one way or the other, just like all of this, okay?
Isn't that cool?
It exploded to the upside. Now, looking back at this green dot, so when you have the building of pressure, the green dot represents the squeeze firing. Firing. Now, the direction this squeeze fired was to the upside because look, it fired and then you got baby blue. If it fired and it was red, it would have fired to the downside. See, we don't know which way the squeeze is going to fire. We just know that it's going to fire. But we have some other tools that we're going to show you to help give us a clue of which direction it's going to fire before it fires. Wouldn't you like to be in a trade during the period of quietness when the volatility was low before it exploded in your direction? That's a dumb question. The answer is of course. That's what we're going to attempt to do, right? That's what we're going to attempt to do. Okay? So it exploded to the upside. Now, one of the things I'll tell you, and again, I'm not going to take credit for this indicator. I did not create this indicator, but one of the things that John Carter says is once it fires, and hopefully you're taking notes, you can look for about an 8, let me get a color that's appealing, about 8 to 10 bars. Once the squeeze fires, on average, you can look for about 8 to 10 bars. What is the bar? Well, if I'm trading on a daily time frame, each bar is 1 day. So once the squeeze fires here, he said you can look for about 8 to 10 bars of positive momentum, which means if the squeeze fires in our favor, we can look for a good 8 to 10 days of price action heading towards our target. And look at that. 1, 2, 3, 4, 5, 6, 7, 8. Oh my God. And I did not plan this. Coca-Cola is something I just pulled up. And then what John said was, after that 8 to 10 days, look what's happening. The momentum is still positive, but it's starting to decrease. That's represented here. So, what he said was when it fires, and then you get 2 consecutive momentum, I guess, decreases, that's when you should be out of the trade. Out of the trade. Okay? Now, we have targets. We're going to talk about targets either in this class or another class, specific video for price targets. But what I want you to understand right now is what this indicator is, where it came from, how it was calculated. Okay? That's what it is. Now, let's see here. So again, it matched up perfectly. All of this matched up with everything that I was saying up here. So we don't need to use that. Okay? And again, good point, Eddie. Look what Eddie said. Here's the deal. Eddie said, in that example, the squeeze transforms into a bull flag. Absolutely. Remember this. When the momentum is up here, that means it's trending up. It's trending up. You've got green dots that fired. So my thing is, when you see this second bar, it's an indication to get out of that first trade, the squeeze trade. But this momentum is bullish. Look what happened. So now the squeeze fired to the upside. Now you can look for bull flags if you trade bull flags along the way. Built up energy, explosion, got out of the squeeze trade, and now you're just rocking the bull flags or ATRs or whatever you like to trade. Okay? So, that right there is the TTM squeeze indicator, how it was made. I showed you visually on the chart, okay, of how John Carter created it. He managed to put all this together into one fantastic indicator. So let me take off this Keltner channel, this Bollinger Band, and this momentum. Boom. I just want the TTM squeeze. Now, we're going to add the 8-period exponential moving average. Again, I'm doing this all from scratch. We're going to add the 8-period exponential moving average. and I'm going to make it blue. I'm going to add the 21 exponential moving average, and I'm going to make it red. I know we're not nowhere near done yet, guys. We got so much good stuff more coming. Exactly. Does this deeper look? No. Entry, we're going to talk about that too. Don't worry. We're going to get to that. Okay, but I just want you to first understand why this squeeze indicator, just from what it is why it's so amazing. The logic behind it. Wouldn't you want to enter into a trade when it's quiet ahead of the explosion? That's what this bad boy is doing for us. The only thing we don't know is which direction is it going to fire. Okay? But you're going to love this. So this is what I'm going to add. Now, if you notice, I have two charts pulled up, the weekly and the daily. I am going to do the same over here. I am going to go to studies, and I'm going to add a study, and I'm going to add the squeeze. Hang on, I want to see if there's an easier way. Whenever it's like this, it's kind of harder for me, but hang on. Right there. There we go. Edit studies. I'm going to add the TTM squeeze. This is just a weekly chart. So right now, guys, I haven't done anything different. Only thing, and I'll show you why I'm doing this in a minute. Okay? But this is the weekly. This is the daily. So far, this is what we got. So what we like is that trend. We want the consolidation underneath the high. And this is what we're looking for, right? That consolidation. Trend underneath. So trend. What we're doing first, Disney also look at that, is remember, market structure. Trend is your friend until it ends. And it has to be true because it rhymes. A trend is your friend until the end. That has to be true because it rhymes. No, I'm just kidding. But it does rhyme. So, number one is by playing the trend, and how can you, an easy way is just look at the moving averages. So what we've been doing was, we'll look at this setup right here, and we say, okay, we've got a squeeze. I don't know why my codes aren't working. We've got a squeeze. So what is that? The Bollinger Bands are inside the Keltner channels. Low volatility. Good. Okay, good, good, good. Now, you made a question about when is the time to buy. Well, you can leg into this position, and I'll talk about it in a second. You can leg into this position, but I like buying between the 8 and 21. But what I'm finding out also is, even when it's below the 8 and 21, that is a good opportunity to buy as well. Okay? Good opportunity. And I'm going to get more because we're going to add another indicator to help you. But as you know, I like to buy when it's in this buy zone, quiet. Even if it breaks down here, I'll buy it. Okay? Yeah, assuming this is going to the upside. But again, we'll show you in a minute. I would play this to the upside because it's trend, pattern, squeeze. Got to squeeze. The only thing we don't know is which direction is going to fire.
So now I've told you how this whole system works. I've shown you how you can use the TTM squeeze to give yourself an advantage in the market. But you know what? To be successful with this, you're going to need more than just information alone. Now, I know you can be successful with this system, but you're going to need coaching. You're going to have questions that you need answering. And you might need help in the accountability department as well. So let me tell you this. I take my job as a coach very seriously. And I'm not going to let you quit on yourself. We're going to get through all of this together. Now, I can't just do that with some videos or some PDFs. Information alone is not going to cut it. My success rate when people go at this by themselves is almost 0%. But my success rate for those people who work with me is closer to 80 to 90%. Now, if information were enough, then you could just go turn to Google. Okay, but you're going to need guidance. Somebody who's been there before. Somebody who can take you there right now. So if you want real, lasting change, you're going to need repeated exposure to this methodology. So make sure you check down below in the description or the pinned comment for my free Option 101 masterclass. Right now, this month, it's completely free to help you get started in your journey. All right, everybody. Hey, I hope you enjoyed today's video lesson. And if you did, guys, do me a favor. Smash that like button, all right? So YouTube can spread this video out to more people like yourself. Really appreciate it. Thank you very much. Hey, and if you're interested in my Options 101 course, right now I'm giving it away completely for free. Check in the description or in the pinned comment. And as always, guys, if you're interested in my Options Elite, right now, anybody who gets my Options Elite, I'm going to give them my Forecast Pro indicator for free and my bonus TTM squeeze course, okay? Going on this month. And as always, if you don't have the TTM squeeze indicator and you end up getting that indicator through my affiliate link down below, I'm going to hook you up with all sorts of bonuses, okay? You help me, I help you. All right, everybody. We'll see you Tuesdays and Thursdays, guys. Tuesdays and Thursdays, 10:30 a.m. Central Standard Time. Right here on this channel, I do my Options live show. So make sure you subscribe to the channel. Hit that little bell so you don't miss the show. All right. You have a great day.